Okay. All right. All right. So I am Sarah Abamba, that is my name. I've been in the forex market since 2020. I think after the whole coronavirus issue, that pushed a lot of persons to be in the online space, and over me, I became part of those that were in the online space. Where anyone. So I've seen the online space. I've been trading forex since then to now. I've not really done any other stuff, just trading. That's what I do. And apart from that, um, I think I trade forex. What do I do again? I train people. If you go to my timeline on Facebook, Sarah Abamba, you will see a lot of, I don't want to put them now. To me, it's not necessary for now. You see a lot of my posts, a lot of my trainings on Forex. Okay. And to a great extent, I've been able to help people in the Forex market. I've been able to help a lot of persons. I've been able to anything that you want to call it, make people find their way in the Forex market. Okay, so also I'm the founder of Switch Digital. It's a training platform for the financial market. Okay, so our topic today is Forex on a budget. Forex on a budget. This topic came because a lot of person has the idea that if they don't have one kind of big money, they will not be able to trade Forex. That if they don't have one kind of big amount of money, they will not be able to trade Forex, which is a total no. It's not true. You can actually trade Forex with the little you have and grow it. You can, okay? My network got disrupted. Sorry. Can you hear me? Can you hear me? Can you hear me? Please, I want
I
to
can hear
get
you,
it.
ma.
Okay. All right, let's continue. So I was saying that you can actually trade Forex with the little you have to do it, provided you just have to understand a few stuffs that just all. If you understand the few things that I'm going to be teaching you in this class, you will definitely trade Forex, no matter what the little you have, and you will actually grow. Although I've not done this before, I don't have the conscience to do it. One of my students, I would have sent is a testimonial here, but I didn't take permission from him. Before I use my own student, before I use them as success stories or what have you, I always ask for their permission. So I didn't. But he actually started, um, he did a challenge of $3. Like he funded his account with the $3 and he grew the account to $40 in 3 weeks. It is in my community. $3 to, sorry, excuse me, $3 to $40 in 3 weeks. Honestly, me, I have not done that before. I don't think I will, but I've done $10. I've done $10. Okay. So we are going to be looking at strategies that will help you in order for you to grow as little as $10, $5. For those that are witty enough, $3, so that you will be able to use that little you have to grow and it becomes much. The thing about forex trading is that the opportunities are enormous. The opportunities are so great that how would I put it? I don't know how I want to explain it. Forex trading and activities are so good, and you don't want to miss out on anything. Okay, you don't want to miss out on anything. Okay, so I want to share the first thing that you want to know in trading a small account. Sorry, let me share my screen because I like typing. I like typing as I'm doing my stuff. So I'll be using the whiteboard. I did not prepare any slide for this class because I'm just going to be talking off my head. It's something I've done before. So that's why I didn't want to just start reading from one kind of slide or the other. Okay, so if you can see my screen, let me hear you. I'm sharing my whiteboard. Can you see my screen? Can you see my screen? Okay, 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 yes. Okay, I'm trying to, okay. All right, so I said, I'm supposed to be typing, let me see. Okay, text. So one thing that you want to know as regards forex trading on a budget, that means using your small capital to make a whole lot of money in the forex market, is that you want to understand risk management first. I will go into the chart, so because this class is both a class on risk management and technical analysis. You understand? We'll go technical. I'll be showing you live my live chart, and I'll be showing you different strategies on how to do this. But today, let's stay here for now. I was saying that one thing that you want to understand in order to grow your account with whatever you are starting with, either it's $10, either it's $15. I don't want to be calling big money here because people do make do with $1,000 or more. But now let me just say $10. Oh, $10 is okay by us. Is $10 okay? I want to just start. I'm using $10 as my minimum, because some persons will tell you $100, some persons will tell you 150, and all of those stuff. So I'm staying with $10. So in order for you to grow your $10 into something big, you want to understand risk management. You want to understand risk management. And apart from understanding risk management, you want to also understand that first, that the forex market is not a get rich quick scheme. The thing is that some persons come to the forex market with Ponzi scheme mentality. Ponzi scheme, like you invest $10 today, in the next 2 hours you get $20 or what have you. That is not how forex trading works. It's not how forex trading works. Forex trading is a whole different ball game entirely. So you understand that you have to manage your risks in order to make whatever profit that you want to make in trading. One, also you have to understand that um this your capital could serve you for a long time, because the forex market is not running. Before I was born, the forex market has been here. And I can assure everybody that is in this class that after now, the forex market will still be here. I think I have to meet somebody. After now, the forex market will still be here. So the forex market is not running. The forex market is still here and will continue to be here. So if it will still be here, why the rush? Why the hurry? So for your account of 0.0, your account for your account of $10, you want to trade with a lot size of zero. I don't know. Hope we all know the concept of lot sizes, because actually this is not forex basic. What is forex? What is pips? What is lot? What is? I'm not actually dealing on those. I'm dealing on a little bit more advanced stuff. Hope we all know what lot sizes are. Okay, I believe we all know, since I'm not getting any response. I believe we all know that. Okay, so you want to trade with the least lot size, which is 0.01 lot
Yeah.
size. I think. Oh, who does not know? Oh, please, let's be responding fast so that I don't get to be going back and forth. Okay. Okay. Do you know what I will do, sir? I will send a book on Forex basics to the group after now so that you will know what the lot size is. You get? So I will send the book so you understand what is lot size. But then let me just give a brief explanation. The lot size is like the unit of currency you want to buy. Your lot size is like the unit of currency you want to buy. So for instance, I want to buy one bread. How am I using bread? I grew up eating bread. Sorry, I think so. Okay. I want to buy one bread, one loaf of bread. I want to buy two loaves of bread. I want to buy three loaves of bread. So this is what I can easily use to relate to lot size. You get? So 0.01 lot size is actually the smallest lot size. You get? Is the smallest lot size. You have 0.01, you have 0.02, 0.5, and we have 1. Then the highest lot size is 99. You get? So I don't want to go deep into that because that is totally basics. I'll send the PDF to the group so that you understand, sir. Okay, let me continue. I said in order to trade Forex on a budget, that means in order for you to grow your account that is very, very small to something big, you have to trade with the least lot size. I'm saying that we are using a basic account of $10. We're using a basic account of $10. This will be my example. I don't want to be doing $100, 150, 1,000. Let's just stay with $10. Okay. So for your $10 account, you want to trade with 0.01 lot size, and you want to trade one trade at a time. You place one trade at a time. You don't enter one trade. You don't take multiple positions with that your account size. If you do that, number one is that you will be tensed when the trade is going on. You will be tensed. And if you are already tensed in your given trading position, you will be defeated in the forex market. If you are tensed, that means you enter the trade and maybe your trade is not going the way you plan. The next is that you start shaking like, oh God, please, 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 God, please, God, please. And you don't know what will happen. Sometimes out of that fear you are having because you traded too much at a given point in time, you are most likely to exit the trade, even though the trade will definitely go your way. Hope you are getting me. Even though your trade will definitely eat your take profits, you'll be profitable in the market and all of that, you will be tense. Why? Maybe because you traded above what your account size can carry. I will always say in forex trading, not use your keke to go carry caterpillar. Sorry for pidgin. That is how I do my own. Anybody that is used to me, yeah, I used to miss pidgin and I be worried get so when I not just sorry. So I was saying that in forex trading, don't use your, let me say, your small account to carry something that is bigger than you. Okay, this is how to trade forex on a budget. Yesterday in our group, I gave them a trade on Euro USD to sell. And instead of the trade to actually start selling immediately, they started buying. And if the trade is buying, like started going up, that means that we are in a loss. But there's what is called stop loss. It's like Sir Williams is actually a newbie here. So maybe I'm going to be explaining some things. Stop loss is an order you give to the market to exit your trade at a loss. So maybe you say you make a prediction that market is going to go up, increase in value. Instead of that, it's decreasing in value. If that happens, you are going to make some loss. But stop loss is such that you said that, okay, instead of me to lose, let me say $5 or $2, let me lose $1. That is your stop loss. You cut your losses short. That is it. So our trader has not hit stop loss yesterday. And there was one guy in my room that was saying, "But please, oh," as he was just sending it to the group, like he was very scared. And me, I was like, what was this guy's problem? Actually, I think the trade did up to was he? I've forgotten how many. I know I closed that trade with some profit. That is 30 piece profit, or more, something like that. But the trade actually went away. But I don't know if the person over traded, like the person used a lot size that was bigger than his account. It is very, very wrong. Don't use a lot size that is bigger than your account. So for our example here of $10, because we are dealing with Forex on a budget, using a small capital, so growing a small capital so that you don't have issue with capital. A lot of persons will say that their problem is capital, their problem is capital. It's fine. Some person's problem can be capital, but some person's problem can be over trading. They don't know how to manage small capital. So this class is aimed at teaching you on how to manage a small capital. So I've said that you use the least loss size, which is 0.01. Now, another thing that you want to know about trading Forex on a budget, using your $10, going your $10 to become much, is that you want to first of all practice with a demo account. Hassan is here. Hassan has become one of my best guys lately. I love you, sir. I know I've not told you before, but there was one thing he did in my group. This is why I'm telling you this. So because of using the demo account. Your demo account is also your profit, your practice account, an account you just use to practice before you start trading with real money. So if you open an account with a broker, they'll give you money, but you cannot withdraw it. So if you make profit, you cannot withdraw it. Why? You're only using it to practice. So in my group, I gave an assignment that they should use one strategy for 1 month. They should try out one strategy for 1 month. If it works for them, out of the plenty strategies I've taught them, they should try out one strategy for 1 month. If it works well for them, they should start using it to trade. So it was Hassan. Was it last week? You can unmute yourself, Hassan, please. Okay, let me unmute you from here. Okay, I think I've unmuted you. Was it last week or 2 weeks? But okay, sir. Please, sir, how did you do? You told me something last week about trading with one pattern.
Yeah, I told you about trading with star pattern.
Okay.
You told us to like practice with one particular candlestick pattern for like a month. So I asked you that day that which of the candlestick pattern, which of them that you have used that have worked for you very well. Then you mentioned star pattern. So I chose star pattern and I did it for 2 weeks. And the result was very great. So since then, I've been using it on my live account.
On your okay, you started with your demo, right?
Yeah, I started with my demo for good 2 weeks. You said a month, but to the fact that I'm in school that time and I'm still preparing for school exam. So I only did it for 2 weeks.
Okay, you are in school. That means you are in university.
Yes, ma.
What level?
Final year.
Yeah, final year. I have started trading Forex already. Okay, how has it been for you? Like,
Yes, man.
what's your monetary returns, all of those stuff? How much you don't make? Because and they fear me.
Yeah, man.
You're laughing.
Well, so far so good. So far so good with the signal in the group. With the one I've been doing personally. So, I've made a very good amount of money. Yeah, at least looking at it now is rounding up to like 50 to $75. I really took to this um risk management that you said we should use a very small lot size and not to blow our accounts. So I've been very cautious with that.
Okay, all right. So
Yeah,
it's
so
still in
that's what
school,
I think.
final year. That is good. I think I started trading, learning how to trade when I was in final year. I could not go far by now. This way, Sha. All right, let me move you.
Anything.
Honestly, all
Okay.
those time I was using to go to class and all of those things. It's all right. It's never too late. So, it's actually, I think you joined us in May, right? Yeah, I
Ma?
think it was, you joined us in May, right? May this year.
Exactly, yes, ma. Yes, ma. I joined
Okay.
you, ma.
Okay, all right. Thanks. Okay, so actually, we didn't plan for this. So, in case people think that I didn't plan, I just came to my mind since I saw demo. So, demo is your practice account. You get. So, he told me that he was using just one strategy in his demo account and it was giving him profit. So, he decided to use it in his live account. And that has been working for him. So in order to grow your small account, you want to use your demo account. Treat your demo account like it's your live account. Some people, because it's demo, they'll be trading anyhow. Maybe that we actually did that. My demo account trade will be in profit. I will not take profit. I will leave it. A trade that will be in profit, it will enter loss. A lot of those stuff. I'll say, But see, my live account, I don't even try it that way because it's live. Immediately I see profit, I'll take the profit. Immediately I see profit, I'll take the profit. So also, in order to grow your account, you want to trade on practice your strategies on a demo account. I'm not written it. So I'm teaching off my head. So I didn't prepare any slide because so practice with a demo account so that you will know the strategy that will work for you. Now, the next thing I want to talk about is to keep to one strategy before we keep to one. In order to grow your account, keep to one strategy. Now, there's a difference between people that have a lot of money and people like us that are still coming up. Because if you have just $10, I said that the example we'll be using for this class is $10. So if you have just $10, I will not be running up and down with plenty strategy. I will share this strategy, share this one, share this one, share this one. I will end up in losses. You get. So if you just pick a strategy and you notice that this one is giving you what you want, you will be able to grow that your small account into something big. So, like Hassan said, I will explain the star pattern when we go over to the chart. Hassan said that he just trades star pattern. Like that is all. There was day that what did they say? Say in the group, I gave a signal and he shared his own chart. He said that the signal is not there. I said, no, okay. He was looking for star pattern. And me, I'm seeing bearish, was it bearish AMA or something like that? Bearish engulfing, one of the patterns. I said, even though you're not seeing star pattern there in your chart, I'm seeing bearish engulfing back pattern in my chart. As I said, if he's not seeing bearish star pattern, he will not trade that is the only thing that he trades, and that has been working for him. So you want to keep to one trading strategy. Me, if I see the engulfing back pattern, I can trade. If I see star pattern, I can trade. If I see bearish pin bar, the pin bars, I can trade. But for an account that you want to grow, you cannot just be jumping up and down like you are everywhere, jump. No, it doesn't work that way. So you try as much as possible to stick to one trading pattern, one trading strategy. Don't just jump. Why it's important is because you wish keeping to one strategy will make you get rid of noise, because there are a lot of noise in the forex market too. Especially for those that are in plenty group. Maybe you see your GPP USD, or let me say Euro USD. One group is saying to sell Euro USD. Another group is saying to buy Euro USD. Another group is saying that you should place a sell limit. Another one is saying they should place a buy limit. You will be confused, like totally confused. So you don't want to trade plenty strategy. Just stick to one. One is okay. You don't need much. One is okay, because it's like, when you set when you hit a target, how is it? Pistol? Yes, pistol. Sniper, that gun that is sniper, that you have to look at it very well, and immediately you just see your target, because you are pointed and focused, you hit your target and it goes down immediately. That is what keeping to one strategy does for you. You will not be carried away with a lot of noise that are in the market. One, also, it will make you enter quality trades. It's not quantity trade though, quality trade. Imagine a trade giving you up to 60 pips or more. Just one trade. Now, if you use 0.01 lot size in our example here, with your $10, one trade giving you 60 pips, that is $6. So imagine $10 giving you $6 just with one trade. And if you do that, let me say 5 times in a week, 6 times 5, that is $30, right? If you do it 4 times in a month, 30 times 4, that is $120. That means your $10 at the end of the month is giving you $120. You get, but you are not scattered. You are not everywhere. You are what? You are focused. You get, you are focused. So you want to keep to one strategy. Don't just be jumping up and down from one place to another just because you want to make profit. That will eventually make you to lose your profits. Is there any question here? Because I want to start showing us charts. I want to go to technical analysis. Is there any question concerning our risk management, lot size, and all of these things you have said? Is there any question? So that I want to trust charts, because we have to do some analysis. There are some strategies that will help you to grow your small account. Some strategies will never help you to grow your small account. Okay, no question. I think I can continue if there are no questions. So let me. Okay. So let me go to. Okay. I want to go to my. Okay. Trading view. We use trading view for analysis. We use trading view for analysis. So I'm going to trading view now. All right. Let me. Let me know if you can see my screen.
Yes, ma'am, I can.
Okay. Oh, no, I don't want to put my password there. This. Okay. So let me find my answer. What are you seeing now? I'm not really added anything. So. Okay. This is right here. Can you all see my screen? This is our chart where we do the analysis. This is called trading view. Okay. This is called trading view. For those that are not familiar with it. Um, so in order for you to use your small account, that is, like I said, our example is just $10. So if I want to grow my $10 account, I should be trading with a small time frame. Now, those that really don't know much about Forex, we have what is called the time frames. This is on Bitcoin. I'll change it. So this your 1 second, 5 seconds. These are just several time frames. 1 minute, 5 minutes, daily, and all of that. Let me go to a Forex pair. I don't want to do Bitcoin. Bitcoin is a crypto pair, not a Forex pair. Okay. All right. So in order to grow your small account, your time frame matters. Your time frame matters. So for this, you want to be trading with time frames like 15 minutes, 30 minutes, 45 minutes. Why? Because your trade will actually go your way faster if you are trading with smaller time frames. Your trade will go your way faster if you are trading with smaller time frames. If you are trading with time frames that are big, like your 1 hour, your 4 hour, it will be somewhat not quick. Me, I trade with 1 hour. I trade with 4 hours. But to grow a small account, you cannot do that. Because your stop loss will be too wide. You cannot do that. So what you will do is to go to list time frames like your 15 minutes time frame. Some persons use 5 minutes, 5 minutes time frame. There was a trade yesterday. I think it was gold. I saw a pattern on gold on 5 minutes time frame that I took, but since it doesn't sit well with me using 5 minutes to trade, so I exited the trade with 10 pips. I didn't stay long. 10 pips, I just left it because it's not really my thing to be trading with 5 minutes. At least I can do 30 minutes. I think today I did what is called what trade? I did 15 minutes. Yes. Let me show you the trade. We took the trade this morning in our group on the 15 minutes time frame. This is a star pattern. I think I have to start explaining strategies now. I saw this star pattern on this 15 minutes time frame, and I gave my guys a buy order. And this trade has done 60 pips. Was it 60? How many pips? Now, let me explain what a star pattern is. Now, these are the things you'll be seeing in the chart that will make you place either a buy or a sell order. Now, the first pattern we start with is the one as Hassan. Oh God, is Hassan's first favorite pattern, which is the star pattern. The star pattern is a 3 candlestick patterns. So you have your first candle. This is a candle, like what you are seeing on the. You have your first candle. You have the second candle. Sorry, I did not do fine art in school, so don't be angry if you are saying something that looks like what does not look like something. Okay, these are three candlesticks. You have the first pattern. I'm adding the weeks. So you have the first pattern, you have the second, and you have the third. The first candlestick, the second candlestick, and you have the third. Now, when the three are formed together in a particular order, I will explain the order later, but just know that it's three candlesticks that are together. I don't know why this is showing me this. Please leave my screen. Ah, what's this now? So I know it will take me here. I don't, this is not, I don't want to sign in. This is not my, this. I don't want to sign in. I don't want to start using my own, better. I don't want to sign in here because, come on now. Okay, like I was saying, the star pattern, actually, star, S-T-A-R, star and pattern, they consist of three candlesticks that are formed together with each other. So you have the first candlestick, you have the second and the third. But just that this first candlestick should be small. It shouldn't be as big as this. So I'm going to delete this and draw a smaller one. I'm going to delete it and draw a smaller one. We have okay. So let me draw a smaller one so that it can be small like a doji. This is a doji candlestick. Or it can be a pin bar. Let me draw a pin bar. This is your pin bar. So this is what you call your star pattern. I'm not really very good in drawing. That's why I'm having this. I don't know. I want to delete this top. This top stroke is not part of it. But I believe when we see it in the chart, we understand it. So let me go to the chart. I'm just trying to. So this star pattern like this, if you are seeing it like this, it's called a bullish star pattern. That is to say, if the market is actually coming down, like this, when this is formed, it starts going up. And for all forex traders, you know that if the market is going up, you place a buy order. So if you see this, the market should start going up and you place a buy order. So this is how it works. I want to just show us some examples in my chart. For instance, I was talking about this. I saw this morning and I gave a buy order for my group. So look at your first candlestick pattern. Look at the second one. Look at the third. And market started going up. This is a bullish star pattern. Why? Because when it was formed, it's likely for the market to go up. What did we do? We took a buy order here. This is a 15 minutes time frame, mark you. So for those going account, you just put a buy order here and you allow it to go up like that. To me, from this point to this point is actually a good rally already for you to take profit. This should be like 30 pips or thereabout. 30 pips is $3. So $3, if you make $3 for a $10 account with just one trade, I think that is fair. So we are just looking at how to grow an account. That is just what we are looking at. We see that this thing was also formed here. Look at your first candle. Look at the second one. Look at the third. And the market will continue a little bit. Okay. I'm not going into, I'm trying to find out this in a smaller time frame so that we will not, I don't want to use big. Please, if you know, now this is the bearish one. That is the one that will make your market to go down. If you're not understanding anything, please use the chat box. I will explain. Thank you. So this is your first candle. This is your second. This is your third. And the market started coming down. You get. So this is a star pattern. This is what Hassan has been using to drink off the Forex market. The guy that is, I know say star pattern go not tire for you, sir. Okay, let's continue. Okay, look at a perfect example here. Let me see. Let me see if anybody has a question. Okay, you don't understand. Who doesn't understand? Felix. Is it the star pattern that you don't understand? Please unmute yourself and ask me. Is it the star pattern that you don't understand?
Yes, ma. Yes, ma. I don't understand the bearish. I don't understand the bearish star pattern.
You don't understand the bearish star pattern. Okay.
Yes, ma.
I was saying that.
Confusing.
Okay, sorry. You know that there are three types of markets. We have the bearish market, we have the bullish market, right? I think I'll start from there. Honestly, I don't want to do basics, Forex basic. But then, you know, we have bullish markets and bearish markets, right? Please, the sticks. Oh, wow. I think oh, Jesus. I think we have really very, very newbies. Yeah. Wow. Okay. Let me ask a general question. Should we start from the basics of technical analysis? I think I'm hearing a lot some background noise, which I don't want. Oh, wow. Wow. I should start from the what is making? Let me see. Let me mute somebody. Okay. I was asking, should I start from the basics of technical analysis? Wow. So where did I start from now? Jesus. This class was not to touch basics at like I didn't intend to do basics in this class. Okay, let me start from basics of technical analysis. So I require you. People buy Sprite for me. Okay. Now this is actually the chart. Like what you are saying that this my cursor is going about is what is called the chart. So it is in this chart we do technical analysis. Now the analysis is what you do on your chart in order for you to either buy or sell in Forex. No, in Forex, you either make money from buying or selling. So it's such that in a given currency pair, if you look at your chart and you say that this pair is going to go down, like, let me use my brush. I didn't know that we have complete. Since this class is for newbie, maybe I will not touch what I intend to touch today. I'll just, so that I don't want anybody to be confused. At least you, who is this person? So now this is a bearish market. So if you predict that the market is going to decrease in value, for instance, let me use dollar. Let me say, you say that dollar is going to go. How much is dollar now? 1650. According to your analysis, you say that dollar will move from 1650 to 15. It has gone, Shebi. It has gone down. That it will make you to place a sell, like sell order in the market. You understand? But then if you say, okay, the market is going to go up. Let me say dollar is going to go up from 1650 to how much now? Let me say 19. You are going to place a buy order. This is not what I intend to do. You are going to place a buy, like because you said that it's going to increase in value. That is basically those are the two things. So it's either you are say that a currency pair is going to drop in value or is going to increase in value. So that is the two stops. I'm coming out to delete the drawing so that I want to have a clear screen. Okay, so that is basically what we do. So for instance, this is a bearish, these red candles. Some persons, as someone was saying stick. Is because you are just coming in. They are not sticks, they are called candles. Candles. This is called a candle. Everything you are seeing here, this is a candle, this is a candle, this is a candle, this is a candle. They are all candles. They are candles of different sizes and shapes. It's just that the different sizes actually tell you what is going to happen next in the market. You understand? So it is when you look at this candlestick, you say, okay, this is going to increase in value, one. Or you look at it and you say this is going to decrease in value. Do we get that? Do we get it to this point? The kind of market is either it's going up or down. Do we get it to this point? Before I continue, Pa? Can I continue? So this is a falling market, is a bearish market. Why? Because the market is coming down. So if I take a sell order from this stop, of which I'm saying what will make me to take a sell order. If I take a sell order from this stop and it's actually coming down, that means it's going to sell, it's coming down, I'm in profit. That is just it. Also, if I say, okay, this thing is going to go up, what I'll do is to place a buy order and it starts going up. Do we grab it? Do we cash it? Please, I want to get feedback from us so that. Are we good? Can I go on to the next thing? Okay, so like I explained, this market is from this point to this point. We saw that the market went up. So what you should do is to place a buy order. From this point to this point, the market came down. What you should do is to place a sell order. Hope it's clear. Is it clear now? Because I just, okay, fine, it's clear. Okay. So I think I can continue. So I talked about these things you are saying here that is not sticks, they are called candles. They are called candles. They are called candles. They are called candles. This top that is here, they are called the wick or the shadow. Like this tiny one that is here, like it's called the wick or the shadow. Some has bigger shadow than the others, while some don't at all. Like, let me expand this one. So you see this one that is like this. It does not have it has very tiny, almost invisible shadows or wick. Let me use wick. Wick is better. So this one. Now this is actually a candle with no body. This one is called the body. From this top to this down is called the body of the candle. Why this tiny stick here now is called the wick of the candle. From here is called the wick. So this is your body. This top is your wick. The down is your wick. Now, why are some candles green and some candles red? Now, the green candles they are called bullish candles. That means it opens here and it closed here. It's called a bullish candle. Maybe it opened at $1 and closed at $2. You see, it went up. It went higher than it opened. That's why it's green in color and it's called a bullish candle. However, this one is a bearish candle. Why? It opened higher and it closed lower. Let me say it opened, for example, it opened at $2 and it closed at $1. You see that the price dropped. That's why it's red in color. It is called a bearish candle. Do we get that now? Oh, I didn't intend to do basic of technical analysis, but it's all good. Do we get that? Can I continue? Please, I need to be getting our responses. So.
Yes.
Okay, thank you. All right. So, okay, we have seen the candlesticks. Now, there are different types of candlesticks. Okay, I think let's go to the time frame. Like, there's 1 hour, there's 2 hours, there's 3 hours. Now, depending on the time frame you are, a candlestick represents that particular time frame. Now, if you notice my chart very well, while I was explaining this candlestick started forming. If you noticed it, this one like this started forming. Why? It's already 9 p.m. And since we're on an hour time frame, a new candlestick is being formed. That's why this one just started forming. So this one will finish forming by 10 p.m. because it's 1 hour. It will finish forming by 10 p.m. So when it is 10 p.m., we will know if it will be a bullish candle or a bearish candle. The starting does not matter because it's already looking as if it's a bearish candle because it has a red color, but no. You wait till after it is formed before you decide if it will be a bullish candle or a bearish candle. You get that? So if we go to 4-hour time frame, each candlestick that you are seeing here represents 4 hours. Like this one is a candlestick that was formed within 4 hours. This one is a candlestick that was formed within 4 hours. Now, if you see here, we didn't say new candle forming. Why? Because the time of the 4 hour has not reached. Like it has not gotten to the time for the 4 hour to elapse. You get? Let me go to 15 minutes time frame. This is a 15 minutes time frame. Now, the time frame does not determine the length because I've actually gotten questions like, so if I use 15 minutes time frame to enter a trade, does that mean that I must stay in the trade for 15 minutes? No. The time frame is just, when you just break things into pieces, like into bits for easier analysis. Your time frame, you use them for analysis, you get. So it does not mean that if I enter a trade with 1 hour time frame, that means I must stay in the trade for 1 hour. No. You can even stay. Some persons, you can enter a trade with 5 minutes and stay in the trade for 1 week. You get. So just for analysis purposes. There's some things you will see in 5 minutes that will make you enter your trade. You will not see it in 15 minutes. There's some things you see in your daily time frame that will make you enter your trade. You will not see it in 1 week, in the weekly time frame. You get. So I guess we understand the time frames now. Do we understand the time frame?
Yes.
Okay, okay. So let's continue. So the next thing we're going to be looking at, you really took me to basic fact. All right. So the next thing we will look at is the different candlesticks. No matter what I do, the candlestick is what will inform my entry. My candlestick is my signal for me to enter a trade. For instance, if I want to place a buy, like I've explained the buy and the sell. So I want to place a buy in the chart. If I want to take a buy order, why am I taking the buy order? This is what is your candlestick that gives you the why. Okay, I've asked a lot of persons tell me that they took this trade, they took this. I will just ask, why did you take the trade? What did you see in your chart that made you take that trade? And you have to explain to me. People that are my students, they know me. I'm a little bit strict because I'm not here to play. If you can, for those that have gone through university, if you can be waking up every morning, go to classes, and go to class, and what again? You stand. Me, when I was in year 1, I stand because You know those general courses that like 10 departments are taking one course, and you go to class, there's no seat, you stay at the back and you be standing. You are not hearing what your lecturer is saying, but you will still stay till the end of the class. If you can do all those things, you go to school for something that you are not sure of, because walai, I'm not working with my certificate. But Forex is what I'm doing. I think, okay, since I came back from service, I've not taken my certificate to go and look for a job. So if I can do all those stress for something that is not, I cannot use to make money, I believe I have to take on more stress for something that will definitely give me money. You get? So I will ask my students, okay, you took a buy order. Fine, it's cool. Why? Why did you take the buy order? So your candlestick patterns are what will give you your why. They will answer that question for you. Why? So the first candlestick pattern we will look at now is what I call the pin bar, not what I call. I will send two ebooks to the group after this class. Candlestick Bible, please remind me. Candlestick Bible and basic, because somebody does not know the basics here. I promise the person that will send the ebook to the group. So I will send the two. So we will know Candlestick Bible. So this is your, what is called the armor. This is your armor. Like, share is looking like an armor. So you have a small body and a long wick. You have a small body and a long wick. Now, please don't mind my color. I think, okay, let me use the right color so that will not confuse us. Let me use this color. So, let me change it. Let me change the colors. I think I have to delete this. I don't want to confuse anybody. So let me remove it. Okay. Let me draw it with the right color. So we have the armor that is like this. All right. So you have your body that is short, but you have the long wick. Now, if this is actually a bullish armor, in a bullish armor, for a bullish armor, you can see that the market was coming down and down and down and down and down. And when this bullish armor is from, the market will start going up, like to start buying. We know that if market is going up, what you should do is look for opportunities to place a buy order. Don't place a sell order. You will get stopped at. Don't place a sell order. You will get stopped at. So for instance, we have something like this. This one is equal to double confirmation. So we have the first one. Sure, you can see this armor very well. We have this first one, this first armor. We have this second armor. And you see that when it was from, the market started going up. It got like this. It did this one. This is a bearish armor. Is it armor or no? It's not an armor. I will explain this one later. This is something else. So it came up, did a pullback. This is what is called a pullback, and it continued. One thing you want to know is that the market does not go straight up. Like, it doesn't go straight up like this. It's not possible. It has to be going like this, like this, like this, like this, like. Why am I not drawing this the way, fam? So this is how it goes. It does not go straight. So we have some moments of pullbacks. We have some moments of what have you. So this is what it is. So this is our armor. Let me delete these drawings I made. So when the armor was given, you saw that the market started going up. This is just what it means. If you go and download your trading view, you can download it to your phone too. So you just open it and you are just checking it. Look at the places where the armor were given. You will see that the market starts going up. Now, this is a bullish armor. The color does not matter. It's the position that matters. It's like this. is a bullish hammer. However, if it is upside down, oh, I forgot. Sorry. If it is upside down, I don't want to use. If it is upside down, it is a bearish hammer. Let me look for an example. Okay, we have seen one. If it is upside down, this one is a dodgy. Let me look at another pair. Oh, another pair. That one is a dodgy. It's not an hammer. Okay, I think I've seen one. Oh, I've seen one. This one happened in the middle of a trend. There's some, if it's okay, I think let's work with this one. So this is a bearish hammer. You see that it's facing, it's upside down. So what it do when it's formed, you take a sell order, like sell, because the market is likely going to come down after it is formed. But if it is formed well, like right side up, is a bullish hammer. What you do is to place a buy order. Do we get the hammer? Do we have any question? I want to look for other examples. Please, you can unmute yourself and ask your question, or you just let me go to a higher time frame and see. This.
Okay, so
I can hear you, sir.
Hello? Yeah, so you saw one and you said that one was in the middle of a trend.
Yes. Okay.
Okay, from the chart perspective, which we don't actually know the next candle that's going to print, how do we know that that particular candle, that is the middle of a trend? Because now using foresight, using foreknowledge, you can actually know that that's the middle of a trend. But supposing we were in a live chart example.
Like in the live chart.
Hello?
Okay, let me go to the live chart. Because look at it. The market is still open. You see that the market is still moving, right? So we can use live charts if the market is still moving. Are you saying that the market is still moving? Okay. Now, there's what we call support and resistance. Hey, this is really, really basic class. I'm really going back again to basics. Can you hear me? Okay, can you hear me? Can we all hear me?
Yeah, okay.
Okay. So I said there's what we call support and resistance. Now, support is a place that is let me see. Support is a place that is below the current price, with which the market reverses from. From which the market reverses from. Now, if you look at this chart very well, we see this place, right? This is one place. When the market got here, this is a daily time frame. I mark support and resistance from daily, weekly, 4 hour, daily, weekly, 4 hour. So when the market got here, the market went up. This is a support. You get. Now, it came to the same zone again. You see that it has started going up again. Now, anything not here is called the middle. So from this place, this is a resistance, right? Because the market started coming down. A resistance is where the market comes down from. I'm using the layman example. I don't want to use Forex example. Forex explanation, layman explanation. The resistance is where the market comes down from. Why the support is where the market goes up from. I believe that is plain enough. So this is a resistance because the market started falling from this place. So anywhere between this support and this resistance is called the middle of a trend. So this place is the middle. This is a middle of a trend. Now, this live chart, you see that the market is still moving. This is a support. The market came down again and started going up in the same zone. So if it goes up to this place, like this point that is here, I will call it the middle of the trend. Why? It has not gotten to this resistance that is here. Do we understand that? The person that answered the question. Am I understood?
Okay, yeah, I understand. And I think I missed that support and resistance side.
Okay, you missed it. I said the resistance is where the market fall, something that is falling down. Like if you throw something to the ceiling, it falls down, right? So your ceiling is your resistance. Now, if you throw something on the floor, it bounces up, right? So your floor is your support. Is it clear? Okay. So yeah, the market goes up to and it starts falling down, that is a resistance. Where the market goes down to and it starts coming up, that is a support. Are we good?
Yes.
So anywhere that is not the support or the resistance is called the middle, in between. Is it clear?
So that means if we put a pin bar in the middle of a trade, it's not a high probability one, the reverse price.
Yes. If it is that pin bar, yeah, that pin bar, let me say if this is the market is coming down here, right? Let me expand it. So you see that the market is coming down from here to here. This is the middle of the trend. If it gives me a bullish pin bar, I will ignore it. Why? You know, a bullish pin bar is telling you to buy. That is a false signal because the market is in a downtrend, so it sells. So if I see a bullish pin bar, I will not place a buy order because the market will not respect it. But if I see it as a support or a resistance, the market has a higher probability of respecting it, like it did here. You get, this is a bearish pin bar at a resistance. The market started dropping. Now, if you notice, we got this small bullish pin bar here, right? But still, the market did not respect it. Why? Because it is not aligned with your trend. So, if I place a sell order here, between here and here, I should be able to get something good, make good amount of money. Up, we are good, we are clear. I want to look for other examples. I'm seeing this one here. This is a bearish pin bar. You can see this was a resistance. Market got here and dropped. So this was a resistance. When the market got here again, it respected it and it started dropping down. Now, this is a bullish pin bar. The market went up, came down to the same zone and started going up again. Okay? Look at another example of a bullish pin bar. When it was given at a zone, which is a support zone, the market started going up, which will give you a good buy signal. Are we good with our pin bar? Pin bar armor is the same thing. Don't get confused. One is bearish, one is bullish. Are we good? Are we good?
Yes.
Okay, I think I'll just do one more thing and we call it a wrap for today because I have a one-on-one training with somebody by 9:30. So I only have 10 minutes more here. Okay. So this is just so actually didn't teach what I had in mind to teach because I cannot teach I cannot go above you people. You understand? So I have to start from where you people are. So what should I've talked about support resistance, I've talked about the pin bar, I've talked about the trend, bullish, bearish. So I think I should do one more thing, which is when I explain star pattern, did you understand star pattern? I want to do something simple enough so that we don't get confused. That's why I'm not teaching what I prepared at all. This is not what I prepared to teach this evening. Okay. Maybe next time, if I'm organizing another class, I will make provision for people that are complete newbies so that we don't get confused. Okay. I think I will do the engulfing bar patterns. That will be the last thing we do this evening so that we can call it a day. Now, the engulfing bar pattern is two candlesticks, two candlesticks. The first one is small. The first one is small. While the second one is big, like very much bigger. Like big. Okay, you see that the second candle totally covers the first candle. This second one completely covers this first one. This is why it's called engulfing. A situation that the first candle totally covers the second one. That is what is called engulfing. Now, for normally we have bullish and bearish. It has to be one of the two. It's either it is bullish or it's bearish. So for a bearish engulfing bar pattern, the first one is green in color, while the second one is red in color. The first one is green, the second one is red. When you see it at a resistance, what you do is to place a sell order. What you do is to place a sell order. But if the first one is bearish and the last one is bullish and it appears at a support, what you do is to place a buy order. So I want to go to, do we understand it? Do we understand the explanation before I start looking for them? Because I have to look for it and show you.
Let us know later, maybe we understand.
Okay, no problem, sir. So I want to look for it. Okay, look at it. Look at your first candle, a bullish a bullish candle. The next one is a bearish candle that totally covers the last one, like the previous one, and the market starts dropping. See that the market started coming down. For someone, I think this should be about, with our lot size of 0.01, this should give you like $2. This should give you like what? $2. So you see the first one, a small bullish candle, a small green candle. The last one, a big red candle. This will tell you to place a sell, that the market is going to go down. And if the market is going to go down, what you do is to place a sell order. Do you understand it? I'm actually looking for other examples. Do we not understand it? Okay. So let me look for a bullish one that is bullish so that we will see this
We
one
have
is
passed
bullish.
one behind.
I've passed one. Let me see. Let me look at another chart. Oh, I'm supposed to. I think we just saw something like this just now. Okay, I think I've seen one, though the market expected it a little, came back and before it finally went up. So let me expand this chart. We see that we see this small red candle first. The next one is a green candle that totally covers the red one. And you see that market started going up. For those that scalp, this should give like almost $2. If you enter, you exit, maybe at this point, you should have gotten like $2. Now, because this is a support, it came here before it started going up. It's like this is just a ranging market, actually. This was formed in the middle of a trend, so it's not valid. Like I said, your support and resistance has to be in check. Okay, now this is a support zone. This is actually a support zone. We see this one. Look at our small bearish candle. The next one is the bullish candle. You see that market started going up, like this one loud, this one loud. You get? So this is the concept of your engulfing bar pattern. So the first candle is small. The second candle is big and totally, when I say totally covers it, the previous candle. And what happens is that the market either start going up. If it's a bullish engulfing pattern, it goes up. If it's a bearish engulfing pattern, it comes down. So if it is going to go up, what do? Is to place a buy order. If it's coming down, you place a sell order. Do we get the gist? Do we get the gist? Do we understand it? This is a bearish engulfing. The first one is a green candle. The last one is a big red candle, and market dropped. It came down, gave a bearish spin bar, and continued down. Do we get the drift? Look at another one here. This one will plenty say. Look at one here. Look at one here, and it didn't give it again, but later market came down, drop and drop way before it started going up again. Know that the market cannot continue to go down or continue to come up. If it's like that, everybody sharp for the make money. So there are times it will go up and there are times it will come down. Okay, so that will be all for this evening. Please, if you have any questions, drop all your questions in the group. I will answer them in the group. Please and please drop all your questions in the group. I will answer everything in the group. I have a personal mentorship with one of my students. That one is one-on-one. So I have to go now by 9:30. I only have 2 minutes. So thank you all for coming. That will be the end of this evening's class. I hope that this little that you have learned, you use it to make the much that you can make from the Forex market. Because you don't have to know a lot to make money. You have to know what works to make money. It's not everything in Forex that makes money. It's the little things that looks insignificant. That is what makes people money in Forex. So please try and practice. This trading view is free. You can just download it and start looking at the things that we have seen. That'll be all for this night. Good evening. On Monday, we have Twitter Spaces on Twitter. I do my Twitter Spaces on Twitter by 8 p.m. on Monday. So I will send the Twitter link. You can follow me there. But you know, Twitter, we will not be seeing chats. We'll just be discussing around the Forex market. That's what we do on Monday. So see you on Monday. Have a nice night. Take care.
Good night, ma.
Good night, sir.